Pump and dump. That's exactly what a lot of stocks are doing right now. So something is going to break on the S&P 500, and we will come back and look at the notes a little bit later in the show. But first, this is the image which really explains things. We'll come back and talk about this, but very simply put, the NASDAQ is down by roughly 7% on a maximum drawdown so far this year. Let's make this really simple because I think people want a simple message. The biggest crash that QQQ or the NASDAQ has had so far this year has been 7%. However, an individual name on an average loss is negative 38. So what that really means is that there's a lot happening under the surface, and this stuff really matters because we're going to come back and talk about Mike Wilson. We'll look at the poor man's CPI. We'll look at the tech valuations. But first, I want to talk about a big pump, or Amazon, which is now more than $2 trillion. Big pump today. And the reason why is because there's an AI frenzy fueling the rally. Big move. Mega cap joins Alphabet and Nvidia above that $2 trillion number. And then here's the dump. Let's refresh and see what we're doing in after hours. But for Micron, it's down by 4.6%. And what's the reason why? Well, the stock slumps despite strong earnings. So when I mentioned pump and dump, what I'm really saying is that the overall market, like even for SPY, maximum drawdown for the year has been 5%, but the average stock in the S&P is down by 15. So what these mega caps do really matter. Remember, Amazon's worth $2 trillion here. How much is Micron worth? Well, it's less than 10%. It's not that it doesn't matter. It just matters a lot less. So it's down because people got a little bit too high on their own supply. Results were strong, but Wall Street's expectations apparently got ahead of reality. Oh, okay. So the other thing which is really important is that these two old farts are going to be debating tomorrow in the first presidential debate of this year. I believe it's at 7 p.m. We'll come back and talk about that later as well. But here we can note that Tesla's getting a nice boost from the Rivian news. I don't know why Amazon's up, to be honest. I saw some news about offering something in China. Maybe that's the reason why. Where people are just like, hey, these are the best companies in the world. They're the Magnificent Seven. And if they've underperformed relative to the last 3 months, hey, let's buy them up now. In the last 3 months or in the last quarter, Amazon's down. It's only up 7%. With today's move, that's half of it. And Meta's up by 4. So it looks like people are starting to position for the next quarter. That's what it looks like to me. I would also note that a month ago, we were in neutral. A week ago, we were in fear. Yesterday, we were in fear. And today, we're still in fear. So the market's definitely scared. But whoa. What about the economic data? Sorry, Jerome, I almost forgot. If we look at what comes out tomorrow, we're going to get a revision to GDP. This is important, but I would note that this number has not been very accurate. When we look at the St. Louis Fed GDP now, it was supposed to be 2.7. This number here, if anything, I think it might get revised to the upside. That would be excellent. Why? Because we're looking for a soft landing, which means we don't want to see the economy weaken. And if we look forward to, this is as of the 20th, so 6 days ago, second quarter GDP is at 3%. So maybe there's a surprise tomorrow. Maybe this gets revised up. I don't know. Not really expecting that. But with initial jobless claims, that also matters. But whoa. What about what I care about? Oh, that's right. You care about inflation. That comes out on Friday. And we did talk about this, but I'll briefly go over it again. I think this is a bullish catalyst. I feel quite strongly about this. But please remember, when I say I feel very strongly about this, it also means that I have a strong opinion, but it's loosely held. We did talk about that before. I don't want to repeat myself right now, but hey, I have a strong opinion. But if I get any evidence that says that I'm wrong, I'm going to flip-flop like a flapjack. Don't worry. That's exactly what I'm going to do. But let's look at Jerome. Why? Man, he's flipped and he's flopped a lot of times in this cycle. But let's see what Jerome is going to be looking at on Friday. Why? Because core PCE is expected to come down. If we look here, going back to the last time Jerome met, and I'm going to ask you for a huge favor, just for me and Jay, if you don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly appreciate that. Thank you ahead of time. So when Jerome got really bullish back in December, that's because the rate of inflation was going down. Look, like nice little every month, little tick down, little tick down, little tick down. Jerome gets confident. Why? Look at those lower highs. It's beautiful. And then we see no more progress, right? They say we need to see more progress. Well, haven't seen anything. 2.9, 2.9, 2.8, 2.8. It's flattening out. This means the last mile is difficult. And if now tomorrow we come in at 2.6, that would be the biggest improvement to inflation we've seen in 2024. We saw a decrease of 0.1, and that's it. There's been no progress otherwise. I think this is excellent. And we talked about the reason why this might happen. It's because the way that inflation is calculated is by using a trailing 12 months. Come on, investing.com. So when we remove a fat number like this, right, 0.5 or 0.6, and add on a 0.2 or 0.3, the number gets smaller. We're getting awfully close to 2.0, which is the Fed's target. Other banks have already cut. So, Jay, all right, maybe it's time to cut, right? Maybe I'm a little bit late to the party again. That's exactly right. And wouldn't it be good for Jerome to cut in July if we're going to have a potential, I don't know what I want to call this, a flare up, might be something else. You guys can tell me in the description what you think. When these two guys stand off tomorrow night, I think things might get quite interesting. Let's use that word, interesting, between now and end of the year. So there's going to be no studio audience. This is going to not be like a normal debate. And they're scheduled to go at 9 o'clock tomorrow, the 27th. It's going to run for 90 minutes. We'll see what happens. I'll leave it there. I'm sure everyone has their own opinion already. So I'm not sure what's going to happen here, but I think GDP might be a surprise tomorrow, but I would not bank on it. And remember, we're looking for the net effect of all these data points because they all come out at 8:30. So just going back to these really fast, I don't think tech is overvalued. If it's 1995, that's what I need to be correct here. So let's read this title again. AI frenzy fuels rally. Company's cloud unit posted biggest sales growth in a year. Excellent. So what does this mean? Man, use the words right there. AI frenzy fuels the rally. And then we also talked about this wall of money, which is supposed to be coming into the second half of the year. Goldman sees a wall of money. Well, what are they likely going to be buying? Oh, they wouldn't want to buy the best companies in the world like Amazon. No. Well, of course they are. That's exactly what they want to buy. First time ever is artificial intelligence fuels the rally, push the tech giant deeper into record territory. Excellent. So remember, if you're looking at your individual stocks and you're like, man, my stocks are not doing as strong as the S&P or the NASDAQ. Yes, that's because the average stock drawdown has been pretty deep. 15, 38, 29, 14. So what these mega caps do is really important. And remember, the only charts that really matter going into Friday, there's 3 of them. Let's go through those individually right now. We're looking at weekly charts. And all we're looking for is to see whether or not we have hollow candles by the end of the week. For Nvidia, we talked about the failed breakdown. Watch yesterday's video or the morning stream if you want to see that. As of right now, we're hollow again. So if we're going to repeat, last time here we had 11 hollow candles in a row and we dropped by roughly 20%. This time it's been 8, and within 1.5 candles, we're already down by roughly 15. This one really matters. We'll see what Micron's going to do to the overall feeling for tomorrow. But look what the market did into the close here. Let's just go to the close. Look at the rally. We're just giving back what we did in the last roughly 45 minutes. I'm not really worried yet. Keyword here being yet. So for the NASDAQ, we want to close hollow, which basically means we're going to be closing out with a failed breakdown. And then finally, for the S&P, we're also looking for that same pattern. As of right now, we have a hollow candle, which means we're closing higher, and we have a nice inside bar. I quite like what I see here. But if you want to watch more, there's now a video queued up on the left, or come hang out with me at 9:15 a.m. tomorrow, and we'll go through some more charts. Thanks so much for tuning in. I'll see you on the next video.